Michael is associated with the Business Angel Group on the Gold Coast. He's been actively involved in helping angel investors for many years. And him and I and Peter Miller, who's going to talk to you a little bit later on, were part of the Comet program some years ago, the Commercializing Emerging Technology. So, good afternoon, Michael. I'm just switching the system across to you.
Good morning, everyone. I'm involved with Gold Coast Angels, and what I wanted to talk to you about today is angel investing, and talk to you a little bit about what we do here on the Gold Coast, and give you a bit of an insight into the process of an angel investment group. And I think it's particularly relevant now in light of the new innovation initiatives and legislation that is coming through, that the accounting profession is made more aware of local angel groups. The 20% tax rebate, which, given that we've got 70 days until the election, you're going to see a lot of advertising on TV, and that's going to drive a lot of people to say, where do I get one of those, please? And the response to that is, well, I invest in these early stage companies, and that's where Gold Coast Angels or Angel Group in general come in.
It's all been shown.
Okay, so what are angel investors? The first angel investors can be tracked back to funding West End theatre productions in the UK, where high net worth individual was happy to make a high risk investment because he wanted to get involved in a bit of philanthropic focus as well, but good chance he'll lose his money. It's moved on to from theatre angels to business angels, which are funding startup businesses, and in particular they're looking for businesses that have a technology that can be taken to a world market. The angel investors fill an important gap in the commercialisation pathway. It is a market failure for a growing company to get the funds needed to fully commercialise their product. Banks just won't come into the equation at that early stage. So business angels, they fund the startup businesses, but they do more. They provide experience, mentoring, and access to their extensive networks, all to help the startup business increase its chances of success. So if we look at typical stages for a startup company, for funding of a startup company, we start out with bootstrapping or self-funding or borrowing, staying at mum and dad's place or friends and families and the such. Then once those funds are sort of used, the next group is what we call the 3 Fs, the friends, family and fools, as we call them, put in to help the company on its commercialisation pathway. The next group are business angels, which are typically high net worth individuals who are investing arm's length, but they can make up their own minds as to whether they want to get involved or not. From there, the business starts to achieve some milestones, get some traction in the marketplace, and then at that later stage, you'll see the venture capital firms start to come in. That's followed by expansion capital, and eventually, potentially, either an initial public offering or float on the stock market, or a trade sale to another company. So, how did Gold Coast Angels start? Well, we undertook, there was a government grant a couple of years ago. It was only about $15,000 or so, and it was designed to identify a skills deficiency, and then design some workshops to upskill that group. So we put our hands up and said, look, we know a group that typically don't know what they're doing. They're called angel investors, and they're making some pretty bad decisions. So the first stage of that grant was to do a training needs analysis. So what we did was we sat down with a whole bunch of people who had the money to invest and, in fact, did want to invest. And we sat down with them and said, look, what's the problem? Why is it so difficult for you to get your checkbook out, for you to make an investment decision? And what was interesting about that was a lot of the fear factors that came out from the high net worth potential angel investors. They made their money in one particular industry and they weren't confident to go into a different industry. They didn't want to be the lender of last resort. They didn't want the entrepreneur to get nasty or have a fight with them. They had limited time that they could devote for their investment. So that all pointed to the concept of why don't we collaborate? Therefore, if I've made my money in property development, but I'm in an angel group, and there's another member in the angel group who may have made his money in IT, and a startup company comes along, well, I don't have the confidence of investing in an IT company because I only know property, but if my mate in the angels group who has got experience, if he's going to put his money in, then I'm more likely to put it in as well, based on that confidence level. So we undertook a series of workshops and case studies, which we worked on in groups on 4 different startup companies, and that was over a 2-month period or so. And in essence, we as a group of angel investors, we broke down those companies and looked at them, looked at what was wrong with them, worked out where we thought we could help, and then went back with a counter offer to the entrepreneur. And in 2 of those 4 cases, they actually invested in the companies. Anyway, we got to the end of those workshops, and we said, well, that's it, guys. We've completed the training exercise. And they didn't want to stop, so they continued on, and they initially called themselves Apollo 13. I'm not sure whether you've seen the Tom Hanks movie where Apollo 13, they had to rebuild the carbon dioxide filter with gaffer tape and such, but that's a bit like getting your hands involved with startup companies. Some of our members were coming down from Brisbane on a regular basis, and eventually they formed Brisbane Angels, and then the angel groups then started to flourish around the rest of Australia, and the Australian Association of Angel Investors was subsequently formed. So to give you a quick profile of Gold Coast Angels, is up here on the Gold Coast. We've got 14 members that are active. They have a mix of skills from marketing, finance, business, technical, IP. We meet probably about every quarter, really depends on deal flow. We can meet monthly if there's a lot of deals coming through. And pitchers are invited to come along and present to us. Then if there's interest in a company that is pitched, we'll start to carry out due diligence and then move on to actually investing. After investing, we get involved with providing mentoring. Sometimes we take board positions, and we use our network's experience to help them either directly or assisting them with finding finance elsewhere and sort of working towards an eventual exit so we get our money back with a profit, hopefully. Sorry. Typically, as a group, we raise between 20 and 500,000 per investment. We've raised over 5 million in the past 7 years for over a dozen companies. So that's a bit of a profile of Gold Coast Angels. In terms of the investment process, just to give you a background there, deals are typically coming through our networks, referrals from accountants, government, universities, consultants. So startups may be invited to attend to the monthly or quarterly meeting and do a 10-minute presentation followed by 10 minutes of questions. They typically leave then, and then as a group, the angel investors sit down, discuss the deal, work out what its warts are, and see if we can't fix those warts, and if we can, is it a good deal? And then typically one of the group will take the lead and will go and meet the startup company to undertake further discussions and due diligence and begin a negotiation process. So negotiation typically takes a month or so, but it can go on for 6 months. Sometimes we say, look, there's some preconditions before we will invest, and it's a negotiation process, so it takes time. It's important to realise that members of the angel group do not have to invest in a deal. If they don't like it, leave it. So in any particular round, we probably have anywhere between a third and 2/3 of the members will kick in for a particular deal. So it would be unusual to have every member sign up for a deal, and that's just personal preferences. As I say, individually, investors are investing between $5,000 and $50,000 per deal, or as a group, that means we're investing between $200 and $750 as a group. Okay, from an investor's point of view, there's a number of benefits of joining an angel group. First of all, you'll get access to new deals. Obviously, you're going to have far more deal flow if you've got a network of people looking for deals, and also you're getting the angel group is getting known in the local community. So you get more deal flow. You reduce your risk. Rather than putting, say, a $200,000 investment into a startup and putting it all on the nose to win, you get the opportunity to say, well, no, I'll put $20,000 into 10 different startups, and that'll give me a diversified portfolio. So if one falls over, another one will hopefully be a star, and hopefully the stars will make up for the shortcomings of the ones that fall over. There's a lot of benefit in terms of your confidence level through the collective experience of negotiation, deal structure, and due diligence. Typically the angel investors have got a lot of experience in doing deals, and to be able to tap all that experience as you're trying to design or be the architect for how a deal is put together has huge benefits. In a group, you'll have a number of angel investors that have got specialised skills, such as, for example, somebody in there with IT skills. And there's good fun. We have good fun, good friendships. If we lose, we'll have a beer and say, well, that's the way it goes. So it's a good social aspect to it as well. And from a startup company's point of view, they increase their chances of success in their commercialisation ambitions because they're tapping the skills, experience, and networks of multiple angels. So just one of the reasons why we spoke to Peter about being involved in today's webinar was because of where we see the market and how it has changed or is changing. So if we look at the last 8 years, it's been pretty ordinary time to be an angel investor, and in fact many have just shut up their wallets, put their checkbook in the drawer, and gone on holidays. The global financial crisis commenced in 2008, scared the hell out of a lot of angel investors. Following that, we had a government funding drought for innovation initiatives. In Queensland, the new government came in and said there's no money left and all programs are canned. The federal government similarly had put programs on hold, and it's not been a very good time for startups over the past 3 or 4 years. Now we're seeing the mining, oil and gas collapse. We've also got productivity and wage growth stalling. However, over the past 6 to 9 months, there's been some very major changes in terms of this innovation ecosystem and the innovation outlook for the future. In Queensland, they brought out an innovation statement in July, committing 180 million to innovation programs. In December, Malcolm Turnbull brought out the innovation statement, which has led to the legislation that Peter described to you beforehand. I missed a slide there. Okay, so some of these innovation initiatives includes the 20% tax rebate, sorry, it's a rebate, for investing in startups. That's going to drive a lot of people, especially as it's going to be advertised over this election campaign, that's going to drive a lot of your customers or clients to come to you and say, where can I get this? And so being aware of the angel groups that are involved with startups is a good place for you to join the connections. Peter's already talked about the capital gains tax-free period, the equity crowdfunding initiatives, and there's a variety of cash grants ranging from accelerating commercialisation to the Queensland Government's range of grants, including the Ignite grant, which is providing between 100,000 and 250,000 for startups. So, in terms of our role, we see that there's a big need for us to hold the hands of potential new angel investors. Our worst case scenario is if a guy who's never been an angel investor makes his first investment and it goes wrong, well, you've just lost him from being an angel investor again. So our role is to help new angel investors, guide them through education and through the networks, and hopefully avoid some horror stories. And also our role is to help startups optimise their opportunities, and that's to create jobs and wealth for Australia. There's with the angel groups, there's a philanthropic bone in our bodies, but a big part of our role is to have fun. So that's given you a bit of a background to Gold Coast Angels. We've invested in a number of startups, including those logos you see on your screen now, and a number of startups that are not just based on the Gold Coast, but around the country. So on that basis, I shall hand back to Peter. Thanks for your time today.
We've now got another poll question that you might care to answer. It's shall I just bring it up? The question is, are you interested in having direct communications with business angels relating to securing investment introductions for your clients? If you wouldn't mind answering that, please. And we'll then move on with the presentation by Rick McAnally.